In this video, I'm going to show you my simple scalping strategy that you can use every single day in the markets to make consistent profits. This strategy presents itself every single day within the first 2 hours of the session open. It's simple, repeatable, and the best part is it doesn't require a bias. But enough talking, let's get into the video. As you can see, here are some recent daily profits that I've gotten using this exact strategy that I'm about to teach you in this video. And here's actually a real example, me taking a trade with this exact strategy. The reason why I'm showing you this first is because I'm not like these fake gurus online who just teach and yap and not actually use the strategy. I actually use this strategy every single day. And as you can see, this trade made me $2.5 thousand, almost $2.6 thousand with this exact strategy. So you've seen my results and now you're wondering, how can you do the same? Well, let me show you. So the goal of this video is that you're gonna learn how you can make consistent profits using this exact simple strategy that actually works within the first 2 hours of the session open. And obviously, like I said in the beginning, this strategy is easy, repeatable, and it doesn't require a daily bias, meaning that you don't have to guess, are we going up or down today? Because I know a lot of you guys probably have this issue. So no more guesswork. This is going to be very straightforward. So this is my strategy. It is obviously super simple, but it consists market trends, fair value gaps, and order blocks. But I'm going to be completely honest, we're going to mainly focus on following the trend in this strategy, and we're going to use fair value gaps and order blocks to enhance it, okay? And obviously, I'm going to show you which market session I trade in, the time frames I use, and obviously later in this video, I'm going to show you real live examples so you can actually understand how to use it in the live market step by step. But pretty much like I just said, the main focus is to follow the trend. In this case, this is an uptrend. We're going to obviously look for buys. And the reason why we want to actually follow the trend and not go against this is because the trend is already there. It's most likely going to continue in that cycle to the upside in this case. So we want to hop on the moving train. And obviously, I know that a lot of you guys have these issues with the market sessions. You don't know exactly which session should you be trading. Pretty much there's Asian session, London session, and New York session. This is what you should be trading in. I trade in this session. Why? Because it has the most volume. New York session, it opens at 9:30 a.m. Eastern Standard Time, and that's when I start trading and looking for the trades. Now it's actually time for you to understand how to use this strategy. Let's start with market trending. So there's two trends in the market that you need to follow. There's the uptrend. It moves in higher highs, higher lows, higher highs, higher lows, higher highs, okay? And then there's the downtrend, low lows, low highs, low lows, low highs, low lows. Okay, as you can see, very straightforward, simple. And the way you actually follow the trend is, first of all, understanding that there's two parts within the trend. There's the big move, which is called an impulse, and then there's the small move, which is called a retracement. And every time there's an impulse and a retracement formation, that's when a high appears in the uptrend. Okay, so this is a high, and when a new impulse closes above that, that's when a break of structure happens. So this is our break of structure, BOS. It's, like I said, when the up candle body closes above the most recent high, aka the impulse appears. And when there's a new impulse retracement, that's when a high appears. And when a new impulse, aka the up candle body, closes above that, that's when a new break of structure appears. And the reason why we need to understand that is because when there's a break of structure, you can pretty much just straightforward enter above the impulse, or wait for the retracements, and then you can enter again. Break of structure, you can enter right here, you can enter right here, or just wait for the retracements, okay? I'm gonna show you very soon in the markets how you can do that. But again, in the downtrend, when there's an impulse retracement, that's when a low appears, okay, in the downtrend. And when a down candle body closes below that, that's when a break of structure appears right here. So you can enter short positions below the break of structure, aka the impulse, or you can wait for a retracement and enter right here for a better risk-reward ratio, risk versus profits. So I'm in the markets right now. This is a replay mode. I'm gonna quickly show you how you can follow the trend, and I just want to give you a disclaimer. We're gonna be focused on the 1 minute time frame. I like to always look at my trades in the 1 minute time frame when I want to enter, okay? But if you look close, this is an impulse retracement. What happens? That's our low, and when this down candle body, the fat part of the candle, closes below that, that's our break of structure. And also, we can literally see that we create a new low right below here, because this is a down candle followed by an up candle, aka impulse retracement. But let's say I would want to sell right here because this is the downtrend and we break below here, below this low. So that's a break of structure. And I would want to target, for this example, like 1-to-2 risk-reward ratio. 1-to-2 risk-reward ratio, let's go. Let's see what's going to happen. This is a replay mode. And there we go. 1 to 2 risk ratio would have been solid, and we would have doubled our risk in this case just by following the trend. Okay, so if I would have risked let's say $200, I would have made $400 just like that. And right here again in the 1 minute time frame, we can see this very nice uptrend. It moves in higher highs, higher lows, higher highs, higher lows, higher highs, etc., etc. But right here, what we can see is this is an up candle followed by a down candle, aka impulse retracement, which is our high in this case in the trend, and we can see a up candle body close above that. So that's a break of structure, which means our signal to enter. We're gonna put the stop loss below this down candle, which is pretty much, we're gonna get straight into that very soon, but it's our order block. We're gonna target in this case 1 to 2 risk ratio, just for this example 1 to 2, and let's see what happens. There we go. Very straightforward. As you can see, the price just bumps to the upside. Okay, very simple, just by following the trend. But now it's time to talk about order blocks. It's very essential to follow the trend. Okay, order blocks are like areas which has orders that these big banks, institutions, and hedge funds need to take so they can fill their large positions. The order block appears after a breakout structure. It is the last down candle after a breakout structure to the upside. So in this case, as you can see, this is an impulse retracement, right? And this is a high appears right here and breakout structure, okay? Because this high closes above the most recent high, etc. And the last down candle after the breakout structure to the upside is our bullish order blocks. I don't know why did I draw this as green. I think I should turn this red right here, this line. But yeah, you get the point. The last down candle after a breakout structure to the upside is our bullish order block. They don't always get tapped into, but when they do get tapped into, there's a huge chance that the order block will get respected and then continue to the upside in this case and continue the original trend. That's why I like to use them as my stop loss in the entry, and also in the lower time frames you can use this as your entry if the risk ratio isn't good enough, the risk versus profit isn't good enough in right here as your entry. You can wait for the price to retrace to this order block and enter right here, or wait for it to retrace here and get a mini bump from there to know that the order block is also valid, and then you can just buy right there and get a better risk ratio. Okay, very nice. But pretty much this is the last example that I just showed you how to follow the trend. But in this case, as you can see, I entered right here when this up candle body closed above this most recent high, which is pretty much a breakout structure, right? But why did I put the stop loss below here? Because this is the last down candle after the breakout structure to the upside. And what happens? This is the shield, and this is where my stop loss goes below that, right? And if we look closely, we can quite frankly see that immediately as this order block got tapped into, it just bumped to the upside and we continue the trend. But did you know that you can also use the order block in the higher time frame? So I'm in the 15-minute time frame. What is this? This is our order block right here. This is a nice uptrend, right? I mean, here it kind of went down a little bit, but if you look closely, we're still bullish in the 1 hour time frame. We're currently in this very nice trend. But in the 15-minute time frame, we can see this down candle, which is our order block. Why? Because this was our high. This is an impulse retracement, up candle followed by down candle, etc., right? And then this up candle body closes above that, leaving this order block behind. And what happens? We can see that later it got tapped into in the 15-minute time frame. Right here, there's a perfect opportunity to later look for buys. And right now, I'm in the 1 minute time frame after the 15-minute bullish order block got tapped into. And what I would want to now see is one breakout structure to the upside in the 1 minute time frame for my entry, if the order block gets respected. But that's a sign that the order block gets respected. But as you can see, it got tapped into right here, but we don't get a breakout structure to the upside. But then we tap into that again, and right here we can see a breakout structure, because this is a high right here, as you can see, and this is an up candle body closing above the most recent high, right? So I could potentially enter right here, put the stop loss below this order block. Again, there's order blocks everywhere. After every breakout structure, there's an order block being created. But if I would want to really like actually follow the trend nicely after the order block, I would want to see 2 breakout structures just to make sure that the trend is still valid in the 1 minute time frame. So what happens? This is an impulse retracement. We create a new high right here. Let me put this right here. And I want to see new up candle body close above that. And that's our second breakout structure, just to make sure that the trend is still valid in the lower time frames. I would enter right here. I could have potentially entered right here, but just to make sure, I would enter right here, put the stop loss below what? This 1 minute order block, because this is our down candle after the breakout structure to the upside. I would enter right here, 1 to 2 short ratio. What happens? Bang. Wow, and this is actually a very perfect example for the order block. Look at this. 1 minute order block gets respected after that and then pushed up. But as you can see, the trend still continues in the 1 minute time frame. So what we do, naturally, we follow the trend. So let's put the stop loss below the order block, aka the last down candle after the breaker shocks to the upside, right here, the order block. And I will target 1 to 2 return ratio for this example. Let's see what happens. Wow, that's actually a perfect example. Look at this. What happens? I enter, the freaking price goes to my order block and then bumps up. This is why we're gonna use these order blocks as our stop losses. Perfect, man, perfect. And now it is time for you to learn about these fair value gaps. Fair value gaps are amazing when you want to follow the trend. Fair value gaps are 3 candle sequence in the trend. What happens in this sequence is that you're gonna start the fair value gap at the top of the first candle's wick and below the third candle's wick. Okay, so this empty box right here is our fair value gap, and what we can do is, we can also potentially use this as our stop loss below here, because it's an area with orders, a void of orders that usually the price tends to draw towards and then continue the original trend. Okay, don't make it too complicated. It's actually very simple. I'm gonna show you real quick in the markets. Okay, as you can see, we're back in the previous examples. This is just amazing, right? But if we would have paid close attention, we can see that these fair value gaps actually appear here in the trend. If we look closely, this is a fair value gap right here. Why? This is our first candle's up wick, so that's where the fair value gap starts. This is the empty box, and this is the third candle's down wick, and this is where the fair value gap ends, basically in the uptrend. But as you can see, it didn't get tapped into because we actually create a new fair value gap right here. This is where the fair value gap starts, and this is where it actually ends. First of all, gets tapped into right here. I could have potentially entered right here on this right here, and obviously put the stop loss below the fair value gap, or I could have wanted to wait for the price to get even more further in the fair value gap to get a better return ratio, enter right here in the middle of the fair value gap and put the stop loss below the fair value gap, and then perhaps get a better return ratio like this. Okay, I know seems a little bit complex, but it's actually very simple. Okay, this is the fair value gap, empty box. And it's best to always enter when you see the respect of the fair value gap. If this now gets tapped into and gets pushed above, that's where you can enter. Okay, you can also use this exact scenario in the higher time frame, the way that I just showed you with the order blocks. But obviously now, because I want to be the most transparent trader, I'm going to show you real trades that I've taken with my real money. So let me show you them so you can actually understand how to trade in the live markets. So because I just taught you about fair value gaps, I'm going to show you a real trade that I took in the live markets recently using this fair value gap entry in the trend. As you can see, this is a very nice uptrend. Session has just opened. We respect the upside. And as you can see, this is our 3 candle sequence. This is the first candle's wick. This is the actual fair value gap, and this is the last candle's down wick, and we're currently in the fair value gap. But let me show you. But if it reacts from that, if not, then I'm just gonna wait and see. Yeah. By the way, I wanted to see the reaction of the fair value gap if it's valid. That's the key, guys. We need to see the reaction if there's actually orders within those. So let me show you. Okay, there's not much reaction. Yeah, in this case, there's not much reaction. Yeah, not much reaction. I'm gonna wait a little bit. I mean, let's see. Most likely gonna wait a little bit. Actually, I just realized we broke above this 50-minute high, broke structure. We're currently bullish on the 50-minute time frame. We just tapped into this 50-minute order block right here. That literally, yo, that's crazy. I didn't even realize that there was 2 examples, two in one. Okay, 2 birds in one. What happens here? There's the fair value gap and also a 50-minute order block. Look at this. Look at this. This is I literally teach you what I do. Okay, look at this. This is a order block right here. And there was also, as a bonus, the 1 minute fair value gap. So you realize all of these confluences, when you put them together, there's a bigger chance of winning. Okay, I put this together. There's the order block, 50-minute order block. It's order block right here. That literally just happened. And man, if we get one more, and as you can see, this 1 minute fair value gap is getting respected. The 50-minute order block is getting respected. This is a perfect opportunity to buy the markets because there's a lot of confluences, right? Yes, actually, I could freaking buy the markets already. We got this nice reaction of the order block. That means the order block gets respected. Yeah, I'm gonna buy the markets. I just bought the markets on NASDAQ. I'm looking for the price to go up. We got this nice reaction of the order block. This is a higher highs, higher lows, higher highs, higher lows, and we get this push up which means most likely we're going to continue this pace right here. So we can enter before it even closes above. Normally I would have waited for one more BOS. Like I just said, I could have normally waited for the breakout structure after the 15-minute order block, but since there's also the fair value gap in the 1 minute time frame, the order block in the 15, and very strong trend, I'm just going to enter right here when the respect happens, because there's multiple things, right? So I'm looking for the price to go up. I enter right here. Let's get this going. By the way, guys, I'm not going to be a biatch. And I'm not going to put my stops to break even if it hits this high. See, because I see too many people put stops to break even when the price moves a little bit, and then what happens? Most likely it will actually cause them to go break even, and then it will go to their TP. Exactly, if you heard what I said. All right, so I just closed 50% off of the trade, meaning that, I normally don't like purchase, but this is at a liquidity area, very close to the actual TP, so it's not going to be detrimental for the actual profits. So yeah, let's continue. Wow, this was actually a very low risk trade. I think it's, there we go. BO actual trade to multiply. But yeah, as you can see, $863 in this trade. Take profit got hit, and this is very low risk for me because it was Monday, etc. There was obviously some other confluences that caused me to risk less, but straightforward, very easy. Just the way I taught you. Yo, and the session recently opened and I made $3.2 thousand with this exact strategy. Why am I saying this? Because I already finished the video that I was recording, but I just took the trade. And with this exact strategy, fair value gap, right? This is a very nice uptrend right here. We got this fair value gap tapped into, etc., following the trend. Simple as that, $3.2 thousand. And yeah, man, let's continue the video. But yeah, I really hope you learned from this video. Thank you for watching. Like, subscribe, and as usual, I will see you on the other side. Peace out.